Hi, in this video, we will build an expiry trading strategy on Nifty Financial Services. So let's try and understand this strategy first. Then we will try to build the strategy on Tradetron and then we will backtest it to see how it has performed historically. Now, this strategy is not mine. I found it on this video by Trading with Grow. So, in this strategy, what they're doing is we are looking at an instrument which is Nifty Financial Services. So, Finnifty is the instrument that we are looking at. After seeing this Finnifty instrument, we are supposed to look at the time at 9:20. So, the strategy starts at 9:20, and at 9:20, you're supposed to look at the in the money call and in the money put option. So let's take this as an example. So let's assume if Fin Nifty is at 21,000. All right. If Fin Nifty is at 21,000, we are basically going to look at the 20,900 call and we will look at the 21,100 put. So once we find these two instruments of ours, we are going to short these instruments at 9:20 in the morning. Now, unlike normal strategies where you have a target and you have a stop loss on these instruments, we are not going to have an instrument level target stop loss. Instead, we will have a target and stop loss on the underlying. So let's say at 9:20 in the morning, our Fin Nifty was at 21,000, 21,000. The futures value was at 21,000. In that case, we are now going to look for a movement of 0.4%. So if there is a 0.4% movement up or if there is a 0.4% movement down, if in any case, we will basically square off these two instruments that we had traded and we will find two new instruments which are currently the in the money call and in the money put. After we find these instruments, we are again going to short these instruments, and after that again we are going to note down the price at which my entry had taken place. After that, again if there is a movement of the 0.4%, again I'm going to square off this thing, and this will continue happening until the time is 3:20. So if the time is after 3:20, in that case the whole strategy will stop and we will close with whatever profit or loss we would have made for that particular day. So let's see how do we build such a logic on Tradetron. So as usual, I have already built this strategy for you. I will be keeping this same strategies duplicate link in the description. You can duplicate it, test it, paper trade it, backtest it, and come up with combinations that you think would work better than this. Um, so let's first try and understand the entry conditions. Now, entry conditions out here are quite straightforward. We are basically looking at a condition of time is greater than or equal to 9:20. Now, we are using greater than or equal to 9:20 since we want to take a trade at 9:20 in the morning. Now, we don't want this trade to be restricted to only 9:20. It could take a trade anytime after 9:20, which is why we are using time greater than 9:20. We are also using a condition called today is equal to current week expiry. This is basically there to make sure that I take a trade only on the Tuesday or on the expiry day of Nifty Financial Services. Now, in this current week expiry, I'm basically selecting my instrument, which is Nifty Fin Services. So, Fin Services will basically give me the current week expiry of Tuesday for that particular week. After doing this, I will now look at my position builder. Now in my position builder, I have a fairly simple position builder, which is basically looking at a call of Finnifty current week expiry with one lot. Now out here, I have a strike FX where I am selecting an instrument which is ATM. So I'm going to basically look at the ATM instrument by this keyword. Now this instrument will by default give me ATM based on futures value. So I will get the ATM of Finnifty at that point. And now, as per my logic, I don't need the ATM instrument. I need the in the money first instrument. Now, in order to find in the money first instrument, let's try and understand the option chain. So let's assume if this is the option chain and this is the ATM strike, I basically need to look at the strike which is one strike above the ATM. So if I need to do this, out here in my offset, I have used something like -1. Now when I use -1, somewhat like this is -1 and this is +1. So if this is my ATM strike, In that case, when I select -1, I'm basically going to get the previous call. So in case of a call, when we go -1 or when we go up in the option chain, we are basically going in the money, which is exactly opposite in put. So when we are looking at put, when we go down, that is in the money. So based on the instrument that I'm trading, I'm basically selecting my -1 out here. Now, I will select -1 because I have a call out here, and same will go for my put. So for my put, I've selected put. In my strike FX, in my ATM, I've selected +1. So by selecting +1, I've got my in the money instruments that I want to trade. Now, after trading my instruments, I basically want to do one more process, which is noting down the value at which the underlying index is at the time when I took the trade. For that, I have generated a runtime variable. Now, a runtime variable is somewhat like a variable that we generate. So, variable is basically a particular keyword which you're generating temporarily within a strategy just because you want a particular purpose to be solved. So for example, out here, I have a variable name which is called underlying price. Now underlying price is a variable that I have generated for my personal use. Now for this underlying price, I'm generating a value for that particular variable. So every variable will basically have a value. So it is somewhat like a lock and key. So every lock will have a key. Similarly, a variable will have a value. Now the value that I want to generate out here is basically the value of the LTP at the time I took my trade. So this LTP will basically fetch the LTP of the futures of Nifty Financial Services. So in essence, what I'm doing out here is that I'm making a variable, and that variable will be given the value of the underlying instrument, which is Nifty Financial Services. Now by doing this, I'm basically getting my variable and a value. Now that variable and value, I will basically check in my exit conditions. So out here, I have an exit condition, which is LTP is greater than get runtime number multiplied by number 1.04, or I'm checking if LTP is less than underlying price multiplied by 0.996. Now let's try and break this down. So LTP is basically giving me LTP of the instrument at that point. Now since I want my target and stop loss to be based on the underlying movement, I'm using LTP with my instrument name. Now in my underlying price, I had previously made a variable. Now I'm fetching that variable. First I was in runtime, I was generating a variable. Now I'm catching that same variable because I know that this underlying price is the value at which my entry had taken place. Now out here, I'm basically multiplying these two numbers. I'm multiplying the underlying price with number 1.04. This is because I had a condition that if my instrument moves by 0.4%, in that case I will want to square off. So for that, I basically am checking if my price has gone up by 0.4% or if it has gone down by 0.4%. After doing this, I'm basically generating another runtime variable. Now this time my runtime variable is having a value of number 0. This is so that I can kill or delete the variable which I had previously generated, because the job of that variable has now been completed and my exit has already been taken. In essence, what we are doing out here is that first my entry is going to be checked, then my positions are going to be traded, then my runtime variable will be triggered. After that, my exit conditions will be checked. After my exit conditions are checked, my exit runtime variable will happen, and then my strategy will see that my entry conditions out here are yet true because time is more than 9:20 and it is yet a Tuesday current week expiry, which is why it will again trigger a trade in that same ATM -1 and ATM +1 instruments. Again, a new runtime variable will be generated, and again my exit conditions will be checked. So this way, I have made basically like an infinite loop which will continuously happen, and it will continuously make adjustments based on this particular strategy until it is 325. So finally, I've added some universal exit conditions, which is if time is greater than 325, in that case, I'm basically going to take a universal exit. So these are my conditions that I have generated. Now I also have my advanced settings wherein I'm basically checking for a reactivation after 6 hours. Now you could also select something like 7 days if you don't, if you know that my strategy is going to take trades every weekly expiry. I can select 7 days and the strategy will stay dormant and reactivate only after the 1 week has passed by. So we can do this, and we can now update the strategy and run a backtest for this. Now I have already run a backtest. So now let's see how the backtest of this strategy has performed and what does it look like. So I'll go to the completed section, and in the completed section I can see that a report has been generated with pretty much most of the expiry days that I can see. Now in this report we'll just download the stats of the overall performance of this report and see some data points that we can understand. Now out here, we can see a fairly steady looking curve, and you can see there are certain data points where the whole strategy is flat. These are basically the periods between the weeks. So since the strategy is taking trades only once per week, you will be able to see certain flat periods, because at that time there would be no movement in the P&L curve. Also, you will also be able to see some statistical data that you can use to basically measure the relative performance of your strategy. Now, it is very important at this point to note that whenever a backtest is generated, a backtest is basically generated with a OHLC frequency of 1 minute. Now, when you're looking at a 1 minute frequency, this basically means that the data of the backtest is available. The historical data is available only for 1 minute durations. However, when you're trading in real time or on paper trade, the LTP data, it continuously refreshes. You will be able to see that every second there is a change in the price of that data feed. Now this is a very major difference. When you look at a 1 minute data versus when you look at continuous data feed, there is a very big difference in the trades that is being taken. So one very important thing to note is that when you look at a backtest and you see any kind of P&L curve or any performance, it doesn't mean that the same performance will continue for you, or you would be able to see the same performance that you have seen in the backtest report in your paper trading or in your life, because there's a completely different data structure that is there. On one hand, you are seeing continuous data, which is in the form of tick by tick data, which is real time, and on the other hand, you're looking at 1 minute historic data, which is basically the minimum frequency data that is available for historic instruments. So also another important thing to understand about backtesting is that uh, backtesting is actually meant to be used as a relative comparison. For example, if we look at this strategy says look at 0.4% and you use ITM call and put. Now, why not use 0.5%? Why not use ITM second call and ITM second put? I mean, the whole objective of the backtest is basically to be able to look at these different values. So run a same strategy in different combinations and see which combination is giving you the best risk adjusted returns, and is matching your philosophy of trading, which is actually what your backtest report is meant for, and not to make sure that that since you're seeing an XYZ performance on a P&L curve, that same performance will basically continue for you. So with that, we will end this video. If you have any other suggestions on things that we should cover in future videos, feel free to put it in the comments in the drop down, and we would be more than happy to cover videos on it in future topics. Thank you very much. Goodbye.